Do you need banks to buy a property? I'm Tim Diesel, I'm a commercial real estate consultant. And today I'm going to be answering a question that came in. Do I need a bank to buy a property? And yes and no. So I think this question came because I've been talking about leaving a little bit of cash and going out there and borrowing. And if the market does crash, banks aren't going to be lending. So I kind of want to answer this in a couple different ways. So here's the first thing. To answer the question simply, you do not need a bank to buy a property. Absolutely not. Absolutely not. There's all kinds of other ways to buy property, right? Private investors, you can, hard money is technically not a bank, but you could get that kind of funding. There's alternative sources, so you really don't need a bank. Now, the advantage with the bank, obviously they're gonna have your best rates, best term. I mean, there's no way. There's just very hard to beat a bank. It's very hard to beat 4%. And if you're creative on a deal, you could get into something that's possibly negative at first. If you have enough cash to absorb that, then there's different ways to work that out. So this is not a prediction, but this is what's going to happen eventually. I don't know when, but eventually any way you look at it, there's a lot of bad loans all the time. Anytime in history, there's always a bad loan, right? When the market's good, when the market's bad, there's always bad loans. And a bank can only lend out so much money, right? They're regulated. And without making this video too complicated for you, there's only so much they can do. And that's why sometimes you'll notice on your credit cards, if you don't use it in a while, they'll take away your limit. And maybe you had a $10,000 limit and they'll knock it down to $1,000. Well, they can only extend or have so much exposure. So they're going to take money from this guy and they're going to give it to their, top flight clients who are getting $50,000 credit cards. They don't want to knock those guys down because those guys are using it all the time. The other guy that's got average credit and an average credit line, they're going to take away from them a little bit. So they're constantly moving their money around. You just don't see it all the time. Now, they also have an appetite for certain types of deals at all times. Sometimes they want apartments, sometimes they have too much office, sometimes they have too many hotels. It just kind of depends on the bank and what their specialty is. Now, the biggest advantage here is knowing all of that. Whenever you make an offer, and I've said this before, you should be writing LOIs all the time. And whenever you do write an LOI, a letter of intent, whenever you do submit that, you should always be asking for owner financing. Always, 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 always ask for owner financing. If they say no, they say no. You figure something else out. But a lot of these guys now, a lot of these sellers, let's suppose they bought an office building for $500,000 5 or 6 years ago. Now they want to sell it for $1.5 million. That's how much these prices have gone up. If you were to ask, hey, would you carry back $500,000? He might say no. They might say, you know what, we'll do 200 or 300. They're still getting some cash out of the deal. Why not? I mean, they're already carrying some of the money. Now, I have been able to do this on multiple occasions. What I'm going to say to you right now, I've been able to do a couple of times, and I've helped other investors do this and put this together. You can get the seller to finance 100% of the deal if you're creative enough. You absolutely can do it. I've done it. You can definitely do that. You can also get the seller to agree to creative terms where maybe a regular bank won't let you do 100% CLTV, but a hard money bank, they probably don't care. Or a private investors really don't care. They just want a return on their money. They're not going to give you the same, appraisal contingencies and the other kind of things. There's always ways to be creative with a deal. Now, my prediction is sometime, I don't know when, but in some time, it's going to be difficult to get bank loans again because there was a time 10 or 15 years ago, no, maybe 2010, 2011, very, very difficult to get a loan. Even if the property was performing, banks were still scared. And you'd have to put 40% down and provide all this stuff. So that's going to happen again. It's going to be very hard to buy a property. And then the sellers are not going to want to deal with banks. They want to drop their price down. So we've seen all this before. This isn't anything new. What I'm saying is put yourself in a position where you have access to private investors, cash, you have credit lines I've talked about, and you don't rely on the banks so much because you can always go to You can always get financing for 50% or 40%. That's pretty easy because that's a lot less risk. Once you start getting into 70, 80, that's when they're going to get a little tough with you. So you can definitely get creative. You can definitely get structured. You do not need a bank to buy a property, but banks are going to have your best terms. That's going to be the challenge there. So many times you can overpay. The problem now is the deals are so skinny, it's very tough to overpay. So as I've said before, once a deal is listed, especially with a large brokerage firm, the opportunity is dead. It's almost always dead. Because whenever you do seller financing, I want you to think about this. If the seller is not getting all of their money, that means the real estate broker on the other side is not getting all of their money. So that means they have to get paid in payments or whatever. So they're not going to push the seller into that deal. And they're not going to talk to them about all the tax advantages. They're not going to talk to them about all the mailbox money they're going to collect. It's going to be a little bit of a challenge. So just try to do a deal that you're looking at in your mind. Do a mock deal. Can I do it without a bank? And if so, how would I do it? So if it's $1 million deal, $500,000 deal, whatever, try to do some practice deals for yourself and think, how can I do this deal without bank's help? Because if you can do that, you're going to be in a really good spot coming up. And there's going to be a lot of opportunity coming up. So I really hope this was helpful. If you have any questions, definitely let me know and I'll help you out. Thank you.